Imagine waking up one morning to find that the price of gas has doubled overnight. Suddenly, your daily commute costs twice as much, and everything from groceries to gadgets becomes more expensive. This isn't just a nightmare scenario, it's the potential power of OPEC in action. Welcome to the Savvy Finance Corner YouTube channel. Wealth begins with knowledge. Oil remains one of the most critical resources in the global economy, fueling transportation, powering industries, and influencing energy costs worldwide. Price fluctuations in oil directly affect inflation, business expenses, and consumer purchasing power. Within this complex system, OPEC, the Organization of Petroleum Exporting Countries, plays a unique and powerful role. Unlike most commodity markets that are largely dictated by free market forces, OPEC exerts deliberate influence by coordinating production policies among its members. This makes OPEC not just a producer group, but a strategic player shaping the balance between supply, demand, and price stability in the global oil market. To understand OPEC's influence, we need to look back at its origins. Founded in 1960 by 5 countries: Saudi Arabia, Iran, Iraq, Kuwait, and Venezuela, OPEC aimed to unify oil policies and gain more control over oil revenues, which were previously dominated by Western oil companies. Over time, the organization grew to include additional members, becoming a collective voice for major oil exporters. OPEC's stated purpose is to stabilize the oil market by preventing extreme fluctuations, ensuring fair returns for producers, and providing steady and affordable supply to consumers. Throughout its history, OPEC has acted as both a stabilizer and, at times, a disruptor in the global energy system. OPEC's primary tool for influencing oil prices is the use of production quotas limits on how much oil each member can produce. By lowering output, OPEC can reduce supply, driving prices higher. Conversely, increasing output can ease prices by expanding supply. This power to adjust the flow of oil gives OPEC an extraordinary ability to impact global energy markets. Historical examples highlight this influence. The oil embargo of 1973 triggered massive price shocks and global inflation, while production cuts in the early 2000s contributed to rising energy costs worldwide. These events underline how OPEC's decisions ripple through the entire global economy, affecting everything from the price at the pump to the cost of consumer goods. The impact of OPEC's actions extends far beyond the oil industry. Rising oil prices often increase the cost of transportation, manufacturing, and energy production, which translates into higher prices for consumer goods and services, feeding inflation. Oil importing economies such as the United States, the European Union, and China are particularly sensitive to OPEC's decisions because their energy security relies heavily on stable supplies. Moreover, financial markets often react immediately to OPEC announcements. Currencies of oil exporting countries strengthen when prices rise, while stock markets in oil-dependent nations may fall due to fears of higher operating costs. This demonstrates OPEC's ability to influence both real economies and financial sentiment globally, making it a key player in the world economic stage. While OPEC wields significant power, it's important to note that it doesn't act in isolation. Non-OPEC producers, especially the rise of U.S. shale oil, have significantly altered global supply dynamics by providing an alternative source of oil that can quickly respond to price changes. This has challenged OPEC's dominance and forced the organization to adapt its strategies. Geopolitical tensions, such as wars in the Middle East, or sanctions on key producers also create volatility, sometimes undermining OPEC's strategies. Additionally, the accelerating shift toward renewable energy and stricter climate policies has begun reshaping demand patterns, posing a long-term challenge to OPEC's influence. These external factors complicate OPEC's ability to maintain full control over oil prices and highlight the complex interplay of forces in the global energy market. Looking to the future, OPEC faces significant challenges as the world transitions toward clean energy. Its member countries rely heavily on oil revenues, but demand for fossil fuels is expected to decline in the long run. To stay relevant, OPEC has begun forming alliances with non-member producers, like Russia in OPEC+, and exploring strategies that allow them to adjust to a shifting energy landscape. The big question is whether oil will remain central to the global economy in the next few decades, or whether renewable energy will gradually diminish OPEC's influence. Either way, OPEC's ability to adapt will determine its future role in shaping global energy markets and, by extension, the world economy. Despite these challenges, OPEC continues to wield major influence over global oil prices, shaping inflation, trade balances, and financial markets. However, its dominance is increasingly challenged by alternative producers, geopolitical instability, and the rise of renewable energy. The global economy is now navigating a delicate balance between ongoing oil dependency and the urgent need for sustainable energy solutions. For individuals, staying informed about OPEC and energy markets is essential, since oil prices affect everything from gas at the pump to the cost of food and goods. Understanding OPEC's role equips us to better grasp the economic forces shaping our daily lives and make more informed decisions about our financial futures. As we've seen, OPEC's influence on oil prices has far-reaching consequences that touch every aspect of the global economy. From the cost of your morning commute to the price of the products you buy, OPEC's decisions ripple through our lives in ways both obvious and subtle. By understanding this complex interplay between oil production, global politics, and economic forces, we can better navigate the ever-changing landscape of the world economy. Remember, knowledge is power, especially when it comes to understanding the forces that shape our financial world. Stay informed, stay savvy, and keep watching for more insights into the global economy here on the Savvy Finance Corner.